Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I'm audible. Sorry for the delayed start. Okay, fine. Okay, I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian sessional live market analysis for today, that is 7th of July. And I'll be giving the forecast-based, the algorithm-based forecast for the week 7th to 11th of July. And also I'll try to give you the levels in which the currencies could be trading. And also try to explain to you with the help of market reading what could happen in this particular week. So first of all, we'll go into that of the derived forecast. And you know that last week on Monday and Thursday, I was explaining that for the non-farm payroll, they are expected to make the drop in the case of Euro and GBP. That is why they have been gaining levels before that of the non-farm payroll and the ECB press conference. And many were wondering when the ECB press conference and non-farm payroll were going to be simultaneous, how the market is going to react. Many were thinking that there will be whips or moves, but the players have built huge sell positions before that. So after that, if they do the whips or move, those who have taken the higher level long position, expecting further upward spike, will book profit. So the players carefully avoided gaining the levels and started making the drop. That shows very clearly that many traders started doing the breakout trades for that of the non-farm payroll as well as the ECB press conference. Then on last Thursday, they just made the slide and then they made a small swing and induced the traders to do the short covering for Friday, as I explained last week. That Friday, those who had taken the sell position after the drop, they will try to induce them to do the short covering. Then afterwards, today is Monday. They are making a slow slide in the case of Euro and GBP. So let us see how exactly in this week they are going to make the moves in the market. So it is the second week of the month of July. So the market is expected to make the trending move. So we need to find out what is going to be the trend from now for till the end of this particular month. So we will be able to come to know about what is going to be the trend followed by the players on two things. One is the week beginning false move. And the week beginning false move will indicate what is going to be the type of move the rest of the days in that particular week. So if they make Euro and GBP come up move, that means they are going to drop after tomorrow. And in case if they drop Euro and GBP today, that means they are going to rise from tomorrow, Euro and GBP. That is what they intend to do. So we'll be able to confirm that what they intend to do by looking into that of the first day move, that is on Monday move, and that gives the week beginning false move. Why week beginning false move? Because they pretend as if that is going to be the trend for the week and induce the traders to commit positions, and later on they just make the opposite move during that of the trending time. So normally what they do is during the second, third, and the fourth, in case if there are 5 weeks in the month, then second, third, and fourth week, and especially in the month of July, you come across second, third, fourth months, wherein they are expected to make the trending move. And the last week, that is 28th of July till 1st of August, that will be the week wherein the month gets over and the new month starts. Then the monthly trend reversal they're expected to make. So second, third, and the fourth weeks, they are expected to make the trending move. And on each week, the first day they will make the week beginning false move. The week beginning false move can be during that of the Japanese session, can be during that of the European session, or all through the day, or sometime only to that of the US session. That is mainly they induce the traders holding the short positions from last week to do the short covering. and also induce the traders to take in the fresh week the position based on the market sentiment. So normally the traders have got the tendency that when the market is trending upward, immediately they go and buy. When the market is trending downward, they immediately go and sell. So that is what they do it as a trending trade. So many of the occasions, what happens after the drop, they go and sell, or after the rise, they go and buy. There comes the biggest problem. Then they get struck with such positions. So how to avoid it, I'll explain to you later on. So let us see the forecast for this particular week. So today, they are expected to make a small firm up during start and then slide during the Japanese session. And the European session, again, like any other European session last week, they are expected to make a firm up move. So once they make the firm up move, immediately that will give the bullish feel in the case of Euro and GBP. And afterwards, inducing the traders to do the short covering or inducing the traders to take a higher level buy, they are expected to make the swing and slide move. Then again, tomorrow they are expected to make the swing and slide during the Japanese session, firm up during European session, and then slide during US session. Then afterwards, they are expected to make a downward move and then firm up on 9th, Wednesday. Then swing and drop during that of the European session. From there, you will come across the drop becomes visible on the European session. The first 2 days, they firm up during European session. The second 2-3 days, they drop during that of the European session. That is how they bring down the levels in the market. And afterwards, if there are follow-up move, then there will be slide on 9th, Wednesday. Then afterwards, you will find the continuation of the slide on 10th, Thursday, and swing and drop move during the European session. And then they will recover a little bit because they don't make the hat trick, very well. So 2 sessions if they drop, the third session they firm up, and then again firm up a little bit as an extended move after a dip on Friday. Then they are expected to make a drop during European session and then swing and slide during that of the US session. Then everybody will understand that, okay, the trend is on the downside. Okay, initially they will firm up and that will give the feel that Euro and GBP are going to firm up, but later on they will try to slide the numerator currencies. So this is the expected market move for this particular week, 7th to 11th. Now, with regard to the levels in which the currencies could make the moves, so Euro is expected to trade from 1.36 to 1.3450 area, and GBP is expected to trade from 1.7150 to 1.66 area. And that GBP is the currency which is used to create the market sentiment. On the upside, they used GBP to create the bullish feel, and then everybody will be expecting Euro to drop more, but instead GBP will be making a big drop, and then they will create the opposite of the sentiment what they have created so far, and GBP could make some big corrections in the market. Thereby, the sentiment will be changed. Then everybody will start selling once it reaches the bottom. Then the players will happily buy when it is available cheap. That is what they are doing it in the case of USD CAD now. Around 1.06 level, they are accumulating the buy position. They have been holding it for about nearly 2 to 3 weeks around the same level. So the traders who have taken the long positions at a higher level, they are forced to close the positions. And afterwards, they will try to gain the levels. So the same way, they will try to create the market sentiment, because here they can simply hold in the case of the commodity currencies. They can simply hold, similarly in the case of Aussie, they have been holding around 0.94 level and then made one extended stop into 0.95 level and then dropped to 0.9350 and more lower. So this is what they try to do it in the market. So we need to understand that what the sentiment they are creating is not true. They create the sentiment for the traders to commit wrong trades. Then in the case of USDN, 102 to 103.75 could be the upward move. And in the case of the CHF, from 89.50 to 91.75, they could gain. And Canadian dollar, 1.06 area to 1.10 area, they could make one-sided gain. And similar to that of what they had done it in the case of Aussie, from 0.95 straight, they made the drop. So they will, without giving any of the swings, they will make one-sided moves in such currencies where the volume is relatively less. Then in the case of Aussie also, from 93 area, they're expected to come down to 91 area. So these are all the expected ranges in the currencies, and you'll come across. And actually, that drop was envisaged last month in a big way, but they have been doing more of a consolidation and made a very little drop of about 50 to 70 pips the whole week. That means they had taken the prolonged time in order to build the positions. Unless and otherwise the volume, adequate volume comes into the market, they will not be able to make shift in trading zone because they have to build the positions. They have to build huge positions. Only then when they make the drop or the rise, they'll be able to make the adequate profit for the huge investments they are doing it in the market. Let's do the market reading. Now, these are all the highs and the lows, which are set around 3:30 GMT. They are referred as the initial lows and the initial high. So all 5 days of the week, I note down the initial lows and the highs and try to find out how exactly in the range or they are trying to make an upward or a downward move. And all those studies can be done with the help of the initial lows and the highs, which is very similar to that of the chart study. But in the chart study, you find that every level during different hours of the day are being taken into consideration. And wherever they are done the upward stopping or the downward stopping, they are considered as the peaks and the bottom. And then we are trying to derive the trend. Instead, if you note down the 3:30 GMT, the levels of every day and try to compare it, we'll be able to easily understand what they are trying to do in the market without any difficulty. We just try it out, then we will be able to understand that it also gives us the sense of time, not what time they are going to do it. Because in chart study, you don't get that. What time they are going to make a downward move, what time they are going to make an upward move, we are not able to envisage or we are not able to predict. Whereas here, you'll be able to find out, okay, during which session they'll be able to do it. Now, in the case of Euro, 1.3597, 1.3581 are the highs and the lows. They are not reached the low or the high. And in the case of GBP also, they are not reached the high or the low. And here in the quote page, you come across 7180 as the high, but actually in the platform, it is 7167. As I explained that they are not updating it properly in order to misguide us, but still we'll try to perfect it. And then in the case of yen, 102.06 is the low, 102.21 is a high, they are not breached it. And USD 89.40 and 89.56 are the lows and the highs, they are not breached it. In the case of Canadian dollar, 1.0651 was the low in the platform, but they are showing here 1.0631 and the high is 1.0667. They are not breached the low or the high. In the case of Australian dollar also, they are not breached the low or the high. So actual high is 93.70, but here they are showing it 93.65. So there is slight variations with regard to nowadays in this quote page, and it is not the interbank treasury quote straight. So anyhow, we will try to derive it with the help of the platforms and also the play market quote page, because we need to know the net change, what they are going to do it, and also the GMT time. And again, they change the GMT time to that of the New York Eastern Standard Time. So what I do is I just take the GMT time from that of the home page of FX Street and just minimize it like this. And you can keep it over here in order to get the GMT time frame. Okay. So they are not breached the high or the low in all these currencies. So which clearly indicates that they are just doing a consolidation and they may just slowly gain the levels during the European session to create the bullish field to start. What you come across now, Euro, GBP and Aussie are showing negative net change. USDN, USD CHF and USD CAD are showing positive net change as the USD gaining move. And slowly they are expected to make the USD weakening move during the European session and then create the market sentiment as a weak beginning false move. And later on, we will see US session again, they will show this sort of like changes. And that will be more today. Then we will be able to understand, okay, they just made the big beginning false move during the European session. So once you understand what they intend to do it in the market, then we try to take the sell positions near that of the high or when they are making an upward stop and above that of the high. So when they make an upward stop and above that of the high, it might be a stop and or sometimes they may make an extended move in one or two currencies in order to create the field. Extended move is for 2 hours. So they breach the high and stay above there for 2 hours, form the new high, but the new high, they don't cut after 30 minutes. That means that is a new high. And once they don't breach that new high in 30 minutes time, that means that is the high. So say, for example, from 1.3597, they go up to 1.3625, then stop cutting the new high for 30 minutes. Then hold between 1.3597 and 1.3625 for about 2 hours and making the slide. That is referred as the extended move. This extended move, what they do is they just go above that of the high and stay there and make only about 20, 30 pips or sometimes 50 pips rise also, but stop cutting it. And that will be a quick move. And whenever a quick move happens like a stop point, which is the stop point in this, the market reverse in less than 30 minutes. Whereas extended move, they hold above that of the high for more than 30 minutes and up to 2 hours. And then they make the slide. Always the extended move will be followed by that of the intentional move. So the intentional move will indicate the true intentions. That is why it is called intentional move. What is the true intention? They wanted to drop. Before making a drop, they wanted to make a rise and fool everybody, and then later on drop. So during such rise, once they stop getting the high, you can take a sell position. And later on, when they make the drop, and keep 30 pips. When they make the drop, we keep stop at entry and try to minimize the risk to nil. And later on, keep about 45 to 75 pips, depending upon the momentum. They take profit order and the limit order. So that once they come closer to that, we can just move the take profit order away from the market and trail in the profit-making position, the stop. So as a result, what happens? We are able to maximize the profit. We don't give any chance to lose the earned profit in that particular position. And we also trail the stop in order to get the minimal profit. And we also trail the take profit order to maximize the profit. And if you try to do it on every trade, you will find really with less stress, we are able to earn consistently more money from the market. And many of the people think that the forecast is important. It is not the forecast. It is the trading strategy which is important. I can give a forecast that Euro can go up to 1.37 or 1.36 and then drop. But once it comes to 1.37, you will not feel like taking a sell position. Because it's human psychology. Because once they quickly gain the level, you don't feel like taking a sell there. Instead, you think that, okay, it has breached that resistance and stayed above that of the high. So probably it may go up further up. So we'll try to take a buy. So we get confused with that of the technicals. And then basically, sometimes you find your gut feeling becomes the true forecast. Sometimes the technical analysis becomes a true forecast. So invariably, you get confused. So in order to avoid all those things, the best thing is the trading strategy. So that trading strategy gives you the advantage. That is, okay, I feel like taking a sell position at 1.3690, doesn't matter. 1.3690, I take a sell and keep 30 pips hedge on them to limit the risk. If I keep the stop, the position is closed. Afterwards, if the market drops, I don't have a position to book profit. Whereas if I keep the hedge order, then the hedge is filled in the event if they go above 1.37 And then doesn't matter. If the hedging is not making profit for 30 minutes, I'll simply close the hedge and keep another hedge order so that the market start making the slide. I'll be able to maximize the profit on the sell side. That is what euro went up to 1.37. I was telling everybody to sell. And I don't know how many people are taking the sell position around that. And later on, when they drop, many might repent. Oh, I could have taken a sell. This is what happens with regard to the traders. Many of the time they repent, but after that, when they go into that of the market in a frustrated condition, a position, and the position makes loss. Because this is where our emotional decision go wrong. Because the forecast can be right or cannot be right. And all the time it cannot be right. Nobody will be able to give a forecast which is 100% true. Even if somebody gives a forecast which is 99.9% true, and if we take a position at that 1.01 error factor time, a position, when the position makes loss, you lose confidence in the forecast. So again and again, people try to find out what is the forecast, what is the best forecast, who is giving the best forecast, etc. And it becomes the endless search. But if they focus on that of the trading strategy, then they need not spend so much of time with regard to the forecast, and they can find, okay, they are making a quick upward move. All the quick moves are false move. So near that of the high, I'll take a sell position. I'll keep the hedge order to limit the risk. And when they start making the slide, I'll keep stop at entry and book profit on the sell side. Okay, they formed the new low quickly and not breaching that low for more than 30 minutes. I'll take a buy and keep 30 pips hedge order. So I'm taking only risk for 30 pips. And if the market suddenly drops in a big wave, doesn't matter. I'm in a position to close the original buy position with that of 30 pips loss of the sell position, the hedging. So I'm not, it is similar to that of using the stop. So if you understand the trading strategy is going to give the consistent profit, it is not the forecast, then only you will be able to really become master in trade. So this is the session timings followed by that of the players and the Japanese, European, and US sessions. And in between, you come across the cap time. The early and the late sessions, they handle the majors, and the mid sessions, they handle the process. Cap time, they make the false move here. So if you understand all those concepts clearly, how exactly they are making the move, and simply using a live market code page, you will be able to predict what is going to be the next move. See, it is not that you need to have a sophisticated chart analysis or other type of statistical analysis to find out. You can simply follow the timings and see at those times what they are trying to do it in the market. And okay, if they are making a quick upward move, okay, it is only an extended move for 2 hours. They make, or for less than 30 minutes during session start time, okay, it is a stop and only session start upward stop and in order to make a drop. And if they, after the first 30 minutes, if they gain, okay, extended move for 2 hours during that of the early session, then later on, late session, they want to slide. You can just predict by yourself. You don't require any sophisticated tool. And what is important? Okay, that session-wise trade. Okay, when they made an upward extended stop, take a sell position, keep 30 pips hedge order. Once the position makes 15, 20 pips profit, keep stop at entry. And once they slide, you book profit or trail the stop and maximize the profit. Once you understand, then following move is an intentional move on the downside. You know, intentional move will happen for 2 sessions and the start of the 3rd session. Till such time, you can just move the trailing stop and they will not make very volatile move to hit your stop at the time. When they are making an intentional move, pip by pip, they will make a slide because they wanted to build sell positions. And in the last leg, the 3rd session start, they will make one quick downward move and then reverse them. At the time, book profit. So every time they do the same. So if you understand, definitely you'll find that market trading is very simple following this method. So tomorrow I'll be coming again and give the Tracking the Forex Market Together webinar, part 1 and part 2. And during the time, I'll try to take the positions during first session and show how exactly I booked profit during the first session itself. A session-wise trade, I'll explain. And the US session, 30 minutes from the start of the US session, I'll also commit positions for that of the US session tomorrow. So I'll be using the forecast sheet. Okay, what they're going to do, swing and slide, move. So European, swing and firm up. So after the firm up, I'll take a sell and then I'll try to book profit during the slide. So this is how I plan on a daily basis. When I have to take a sell, the market trend is downward, but after the drop, I'll not sell. But when they are firming up, I'll try to sell and book profit. Okay, wait for the tomorrow's opportunity again. So if you do that, and leisurely you'll be able to earn money from the other market. Instead, if you try to hold a position unfavorably and try to hold 24 hours, 48 hours, 72 hours, and things like that, you become really frustrated and your patience is tested again and again. And you find that you are not in a position to really make money in the market and try to blame any system for that matter. Ultimately, the trading system is the most important thing. It is not the forecast. So I'll answer to the questions which are asked here. Then Arun, it means you are expecting a drop in majors this week. Yes, the trend in the case of Euro and GBP are expected to be downward. Then Venkatramana, for commodities trading, is it the same method the players follow for the, yeah, they do with regard to the majors and the two commodity pairs. Only the two commodity pairs, not the New Zealand dollar. And many of the people think that New Zealand dollar is also taken into consideration by the players, but New Zealand dollar is being controlled by the local players, not the international players. Then you said firm up. Firm up is called a firm up for about 20 to 30 pips above that of the high, or sometimes they may do only about 5-10 pips also, depending upon the volume, where the cluster of stops are. No? Wherever you come across cluster of stops, or otherwise, there are already high level buy positions of the traders. The average is around 1.3650. Then they go only up to that of 1.3640 and then drop. That is why many of the occasions you come across, they go closer to that of the psychological level 1.37, but they don't breach it. So they know, they got the inside information, so where exactly the stops are. So they will never lose money. Keep it in mind that the players will never lose money because they are investing such a huge money and they cannot afford to lose that. And they cannot afford to lose the number one, number two positions in the world, the richest in the world. So they will only take calculated risk. And for that, the banks facilitate. With a non-farm payroll on Thursday, also, AUD was not able to breach 93.30. So that is crazy. So from 95 area, they dropped it to 93.30. And you want all the drop to happen in 1 week. That means you are restless. They have their own weekly limitations, and they can do only 100 to 150 pips in a low volume condition. And definitely they have to swing and induce the traders to take buy position before making further drop. Then Arun continue. Why these days the volume of trader has decreased? So basically, when you continue to lose money, you will not pump in more money. So it is a common human psychology. When the traders are not participating, automatically the volume comes in. And those who have got the huge capital also, they become cautious. They wait for some prime data release and then commit positions. So they are not committing positions before that. So what to do? The players can only make consolidation. Other traders moving to the market hardly see the volatile moves. See, it is not moving from one market to another market. Some traders might move, and some traders will simply say that, okay, this is not the place for me, and simply they will get rid of or quit trading and look into some other hard earning process, like going for a job, etc. And some of the traders who are not satisfied with it, or still they got the urge for speculation, they may move to that of other market like stock market, commodity markets, etc. When they lose money there again, see, it is not that they lose their greed or they lose their the urge for trade, but they cannot trade. When they don't have money, they cannot trade. And such a frustrated situation, many of the traders quit trading. It is not that somebody make a self-analysis and just the reasoning out. Okay, no, this is not the place. Okay, I lost about $3,000. That is enough for me. So I will not risk for their money. There are some traders who are wise, and in the initial stage itself, they just quit trading. And there are other traders, they just use their money. Okay, lost it. Doesn't matter. There are credit cards which are giving the money, pump in the credit card money. Okay, that is also lost. You are not able to pay for the credit card. You borrow from somebody and try to pay the credit card and use the credit card. Then you come to the extreme level wherein the credit card does not give, or you are being considered as a defaulter. Nobody wants to give you the money. Then you say you are quitting. No? When you become helpless, then you quit. All happens because there is a failure with regard to the understanding of our emotions. So ultimately, the players cannot put their hand through the computers and say that, come on, you sell euro after the drop. They don't do that. They cannot do that. They only trigger your emotions. How? By making quick moves in the market. So when they make a quick rise, then immediately you are triggered and emotionally you feel like buying it. Whether you refer to the chart or whatever it is, or technical analysis, okay, it has breached the resistance, it has gone above, sustained there, so let me go and buy. But such buys, you have to exit within 2-3 hours. And if you fail to exit, then they show the drop afterwards. Then you realize that you are holding the buy at the highest level. Then you wait. And when the position erodes all your equity, then you simply blame the market, or you become wise and talking about the economic conditions without taking positions. You become an active participant in chats and also give a lot of comments in the market because you don't have money to trade, but you want to follow the market. So don't do that, because don't cheat yourself. By cheating yourself, that you are not going to benefit anybody. So self-realization is ultimately vital. So understand whether any particular analysis is helping you to make money. Okay. And also give a thought about the trading strategy and find out whether the trading strategy is really able to help you to make consistently money. Then whatever be the forecast, you try to strictly follow the trading strategy. You find that slowly you are able to build in the money. Because if you learn to avert risk, that itself is the great profit in the market. And Moses, how comes on Thursday the non-farm payroll was strong for the dollars? Because Friday happens to be a holiday, that is why non-farm payroll is released on Thursday. It's an exceptional case. But GBP dropped quickly and then it gained. That is how the players do it. No, they want to create the bullish feel in the case of Euro and GBP again. But Euro, they dropped it because of the ECB, the fundamental. So, but they just used the GBP to retain the market sentiment. And you know that a lot of short sellers are there in the market in GBP around 1.70, 1.71. They want them to come for a short covering before making a drop. In Moses. Murtaza Ahmed, I explained that they are expected to make a forward move during the European session, and afterwards only they are going to make the slide. Then Moses. Can you kindly repeat the point? Where are the commodity pairs, controlled market players? No, I said that the commodity pairs are the Aussie and Canadian dollar. They are the two commodity pairs. And many people think that New Zealand dollar is also operated by the other big players. It is not. If you ask the banks, they will tell you. In Moses, in any, what is your forecast for Euro Yen and USD ZAR? Okay, Euro Yen is expected to make either way moves because Euro is expected to make a slide and USDN is expected to make the rise. What happens, sometimes they drop USDN along with that of Euro, then Euro Yen will drop. And sometimes they rise along with that of Euro, then Euro Yen goes up. And on other occasions, you come across the USD gaining or USD weakening move. At the time, both Euro as well as Yen will be making the USD gaining or the USD weakening move. Then you find Euro Yen moves on sideways. Whenever you come across the net change on the negative, then see how far they are dropping it. Once they stop cutting the low, in the case of Euro, once stop they cutting the low in the case of USD Yen, and also Euro Yen for 30 minutes during the mid session. Try to take a buy position after the drop. You will be able to see a definite profit in Euro Yen cross. And they are expected to make either way moves in the case of Euro Yen and GBP Yen this week. Then India. Okay. Radha Krishna, how do I get into your webinars tomorrow? You just go into the of, okay, you got it on FX Street. Yes, you just click and enter into that room. Once you log into FX Street, you will be able to enter into the room after clicking that link, similar to how exactly you entered today. Euro and GBP are behaving differently as major because, see, they have to show the variations with regard to the net changes in the case of Euro and GBP in order to handle Euro GBP cross. So the European cross also very important. No, they cannot just like this keep it 000 from Friday. They have to make an upward and the downward move. No, for that, they have to show the variations with regard to the net change in the case of Euro and GBP. Sometimes you may come across that Euro is showing negative net change and GBP is showing positive net change. On Friday, they showed it that way. So you have to understand why they are doing all those things. Then you will really find that, okay, it is not simply doing the chart study will be able to help us to understand what is going to be the next move. Okay, in Euro, GBP behave differently. Euro has gained about 780 pips in the last year, and GBP has gained about 2,207. See, this sort of understanding, Aditya, is of no use. Simply studying it from the chart, how much pips they gained, how much pips they dropped. Okay, that's of academic interest. First of all, you need to understand when you compare, see, you can take the chart, the monthly charts, and you can just compare it to the of any years. And that will give an impression of overall, it is an upward move. Overall, in 5 years, it is a downward move. Fine. But ultimately, what the technical analysis say that you narrow down the timings. Like you come to that of the 4 hours and the 30 minutes and 15 minutes, 5 minutes, and find what is going to be the trend. Because ultimately, once you take the position in about 30 minutes or 1 hour, you should be able to book profit. Don't get confused with the long-term forecast and your short-term trades. Please understand that is very important. Okay, ZAR is expected to strengthen. I forgot to mention. USD ZAR is expected to, ZAR is expected to strengthen. That means USD ZAR is expected to come down. The lamb, now majors show net negative net change, so that it is a drop. Weak being a false move. Now we have to see till end of the US session to find out which is week beginning false move. And tomorrow move, that is what I said, that there are two things we need to identify what trend they are going to follow in this week. The first one is the week beginning false move. Today, if they just make a small slide and form up and then slide, you get confused whether the slide is the week beginning false move or the rise is the week beginning false move. And tomorrow, they will try to consistently make in two sessions the move. If it is a USD weakening move, that is going to be the trend. If it is a USD gaining move, that will be the trend for the rest of the day. So two things we need to consider to confirm in what way they're going to make the moves in this week. And the fine-tuning of those week moves, I just shown it with the help of the expected market moves. My reason was whether I need to approach Euro and GBP differently on intraday. No, you collectively watch Euro and GBP with the same mindset. But only thing is there will be a quick variation, and there are very few occasions wherein they will try to make differential move, like Euro showing positive net change, GBP showing negative net change, that sort of thing, in order to handle Euro GBP. That will happen only during the mid sessions, mid-European section or mid-Japanese section, etc. Session start time, they will always try to make the USD gaining or the USD weakening move. Try to follow it several days, then you will be able to understand how they are moving it. They don't have any secret, but only thing is, we think that the market is very complicated to study, and we complicate it by ourselves by looking into so many types of statistical analysis. And when you go in for more of such studies, invariably we will get confused, nothing more than that. So ultimately, we have to keep our study as simple as possible. So tomorrow I'll come back again and give the tracking the forex market together webinar 9 GMT and 14 GMT, and focus more on the trading strategy, because all along I have been telling you, you have to focus on the trading strategy. So I'll use the forecast and I'll try to take the positions and show how exactly I'm making profit within the session. I'll show it during that of the second session. You can also simultaneously take it in a demo trading platform and find out whether you are able to really make money. And then I also use the hedging. In the event if the position is not making profit, how by using the hedging, I'm able to book profit during the either way moves of the market. That is another important thing with regard to the trading strategy. See, if you are able to understand well, okay, whatever way the players move the market, I'm going to make money, then you get rid of the market fear. That is most important thing. And once the fear is not there, it is like driving. Once the road sense you develop during the driving, then you find that any road, any part of the world, you are able to drive it without any hesitation. So understanding is important. So if you don't understand, then you become tensed. What is going to happen in the market? If you understand, then you laugh at them. Okay, this is what you want to do. Okay, you do it. I will trade accordingly. Then you will also be participative along with them. Okay. Then afterwards, on 10th of July, I'll come back and give the review of the forecast, what I do for this week. And we'll try to take up from there. Thank you one and all. Wish you all very happy trading, and see you tomorrow during tracking the forex market together. Thanks, Adinda, for I have taken a longer time in finishing the webinar today. And sorry for the delayed start. Thank you, Sandra.